Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello Canadian friends and US friends and everybody friends. Congrats on the day for Canada. It's the official day. They can buy. I assume we're going to see, sellouts and shortages. That's what we've been hearing about in the news for a while. So I think the market is probably pricing in to a certain degree the fact that we are going to see significant reductions in inventory and obviously a lot of product being bought up. The numbers are going to be huge initially, as they always are in all the states that have done this time and time again. In the US, we see this time and time again with headlines of, X million dollars first month of sales. And that's obviously news that is potentially going to keep coming as these initial numbers come out. How the market responds to them, we'll see, but we know it's going to be significant sales, at least initially. So as we head into today, before we get into the action, a little bit of an analogy. Today I went swimming in the middle of the day at the beach, and I love body surfing and just riding the waves. Body surfing is pretty much surfing, but without a surfboard. So you're standing there waiting for the waves to come. You get a good one. You push off from the ground. You kick a couple times really hard. You move your arms real fast and swim. You get on the wave and you ride it into the shore. So I was standing there and getting all kinds of analogies with what was going on around me and with trading. And I was initially catching waves, and then eventually some other people came out beside me. There was 3 or 4 of us there at a point in time. And I was just observing other people and making note of what I was doing. And at this point, I've been body surfing for probably about 25 years or so. So I have a really good feel of when the good waves are. And waves come in sets where they'll have, 4 really good waves in a row or so, and then a bunch of really small waves. And then those same waves, those big 4 waves, will come back again. And that's just the way that the tides and the oceans work. But it was a bit of perspective for me because the people around me were going after these waves that, weren't good setups. They weren't breaking correctly. They were breaking early or breaking late. And to try and catch all these waves, you're using up a lot of energy and you're missing out on the good waves that are coming behind it. So as I'm watching these people do this, I'm thinking this is an analogy of people over trading and taking setups that are not clear and not being patient and missing out on opportunities. So they're using up their energy, which is an analogy of using up their capital, not having that capital or energy for the good waves when they do come, and missing those good waves and opportunities because they're focused on the lesser waves and they have to get back out to the breaking point to get those good waves. So for me, it was a lesson in patience, in recognizing good setups. And there were even times where I would be like on the top of a wave and about to put all my effort into catching it. And then I can feel this isn't a good one and I'll back off. So I'll initiate almost a stop loss, me at the top of the wave, about to go into it and pulling out real quick and taking a small loss, small amount of energy, small amount of time, and then looking back for the next wave. So all kinds of trading analogies out there in the ocean today. Let's get into the dip buying that occurred today. Again, just general rule of thumb. It's obviously not going to happen every time. You can find examples where it doesn't happen. Gap ups for selling, gap downs for buying. APH, if you just follow that rule of thumb, you're doing really well in the last 2 days. APH is starting us off here for Reddit's sake. Give the Reddit boys some time to shine, because it was clearly the most significant dip buying. And they had a price upgrade and a target of $25, which is only going to help. And the volume is significant. So very solid bear volume yesterday. The bull volume buying the dip today matches it. And it was the first name to break the hourly lower highs. Lower high was 1929, and it broke that resistance where everybody else was still forming hourly lower highs. So at this point, it is very notable the size of the strength. We have a new daily higher low. Anything above 1593 was a higher low. We bounced off 1677. That's our new daily support level. And essentially, let's look at this weekly chart because it's a tightening range right now. And we're going to get a nice break of this weekly tightening range sometime in November, most likely, unless news comes out. And that's going to be a really nice trade setup here. So as far as the daily chart is concerned, we've got our high, low, lower high, higher low. We'll call a lower high here at 2096 and a higher low at 1677. So that is now our range. I do anticipate a lower high to form compared to 21 and to see this range to continue to tighten into next week. And that's just because we're overextended on the hourly chart. We do need to establish an hourly higher low and see some healthy consolidation. Right now, our support levels are on the 15-minute time frame, and we're looking at $19.13 and $19 as the first two support levels. After that is $18.78, and you can see after $18.78, there is no support nearby. And the bounce that took place this morning, we had the fast flush down on the gap down open, and the bounces on the 2-minute time frame, it was very drawn out and sustained. It wasn't just a V-shaped recovery. We could see that it was loading, and it was in most individual names we saw this 2-minute pattern as well. APH just saw it the most significantly, but it's to see this slow and steady higher lows and higher highs, and certainly in percentage-wise, it was very fast of a move, but considering to the V-shaped dump and recovery we're used to, this was a slow grind higher, and it showed me accumulation. So again, it showed accumulation on pretty much everybody in the sector, just most significantly on APH. So again, if we lose the 15-minute uptrend tomorrow, we will look for healthy hourly consolidation. We do need to form an hourly higher low. And again, we will look for a tightening range on the daily chart. Pending any news, we will look for a range of 1677 to 2096 and a clear break sometime next week or maybe even beyond if things really slow down. But I would say next week is more likely than not. CGC, on the other hand, also saw a bounce. Not as significant, but we're maintaining daily higher lows here as well. Anything above 46.52 is a higher low. We flushed down to 48.30 before the bounce got going. That's a new support level to be watching. And as far as the hourly chart is concerned, the bounce set just an hourly lower high. And that was the case for the vast majority of individual names. Because of the gap down open, even with a solid bounce, we're not going to change the hourly trend initially. So we ended the day on CGC with a very clear 15-minute pattern. And it actually looks like we did... Nope, we held that double bottom. So it is a 15-minute equilibrium. Low of the dump, high of the bounce, higher low, lower high, double bottom at 50.20, and another lower high at the end of the day of 50.97. So right now, 50.97 to 50.20 is the key range to be watching. If 50.20 breaks, it's 50, and then no support down to 48.30. If we get a bull break of 50.97, 51.59, and 52.87 are resistance levels after that. So a clear tightening 15-minute pattern that's likely going to break during extended hours, but ideal scenario would be if we open within this range tomorrow first thing and we get the break occurring during regular hours with regular real volume behind that break when it does occur. So the hourly time frame, we have our low, the high of the bounce. We are looking for a higher low. Even if the 15-minute chart breaks bearish, we will look for 48.30 to hold initially, but we have to see a clear hourly trend change to be confident that our daily higher low has been established and that the bulls are back in control of this move. If we do get that, and if we do get follow through for the bulls tomorrow, we will look for a lower high compared to 59.25 and a tightening daily range, just like we're anticipating on APH. It's just the bulls on APH are much more comfortable than the bulls on CGC because of the significant move off of the low, whereas CGC right now where we stand is only about a 4% move off of this low. And again, for APH, where we close, the move off of the low, much, much more significant, over 10% plus. ACB lost the daily uptrend. So that's notable. It's the only major name that has lost the daily higher low pattern. That key support was 12.50. And that breaking shifts momentum a bit. So on this bounce, we are going to look for a lower high to form compared to the all-time high of 16.24. We have a very wide range to be watching over the last 2 days. And right now we're watching the hourly chart. Did the hourly trend change? No, it did not. It was just a lower high compared to the afternoon of yesterday. And now it's sideways tight trading with a 15-minute equilibrium. We got confirmation today from the NYSE that ACB is going to get approved for the uplisting. The market did not react. I think it's pretty priced in at this point. Resistance is 1387. Support is 1351. And 1340, and you can see the lack of support of 1340 breaks, just like APH on the 15-minute. If we see a break of 1878, a lack of support. So those initial lows of consolidation are the most important support level because there's no backup behind it. Imagine it, if it was like a battle and you have multiple lines of soldiers or whatever. If your last line of defense breaks, that's obviously the most significant than if your first line of defense breaks. So those are the key levels to be watching. Another clear 15-minute pattern. Hopefully tomorrow we open within this pattern and get the clear break during regular trading because there's much more fake outs if we get a higher open or a lower open from this pattern, and that's consistent on all stocks. If you see breaks of ranges that occur during extended hours rather than regular hours with real volume, there's many more fake outs in that scenario, and oftentimes I won't play inside bars breaking if it happens on a gap up. CRON on the daily chart, higher low, anything above 868 will keep the daily higher lows intact. Bulls are hoping that 1012 is our new higher low, but again, this bounce is still just an hourly lower high. So the top of the bounce didn't even get close to where we were up at the resistances from yesterday. So 1046 is where we topped out, and we didn't form a 15-minute equilibrium. We did for a bit there, but it broke bearish. So if we just compare CRON to ACB and CGC, ACB and CGC are still in their 15-minute patterns. CRON already broke bearish. 15-minute lower high of 1082. So 1082 and 1104 are resistances. Support is 1051, 1046, and then the low. So a clearly slightly weaker 15-minute time frame for CRON than for anybody else. So if I had to rank them right now based on today's action, it would be APH the strongest bounce, obviously. Then it would be ACB. ACB and CGC pretty much the same on their 15-minute. CRON would be next. And let's now compare TLRY. Pretty small range for TLRY, all things considered. Anything above 122.13 is a daily higher low. So the bulls are not concerned about breaking the daily uptrend at this point. We would need about a 20% drop before that would happen. And looking at the hourly bounce, we just set a lower high on the bounce attempt. We broke the 15-minute tightening pattern bearish. We had the high of the day, low of the day. We did get a new high of the day on the recovery, not by much. There's our tightening pattern with a bear break. So first resistance, 148.29, then 149.93. Support is down at 146.27, 145.02. So again, slightly more bearish, more in line with CRON. So TLRY and CRON are very similar on the 15-minute. CGC and ACB are very similar on the 15-minute. And APH is the strongest. So again, where do we stand from here? The answer is, unless there's significant news, we are going to likely stay within this 2-day range that we've established on all these names into next week. So today I traded very, very sparsely. I was knowingly going into today conservative because yesterday and Monday were very big days, and I'm not going to give any of that profit back. So I'm going to be picky. I'm going to wait for that good set of waves to come rather than trying to catch those waves that might work out. They might waste my energy. I'm just going to wait for the big waves. So for CGC, I did play one move. I did actually play options today just to get a feel for it and to see if the liquidity was better. There was a lot of unusual options activity for $50 calls to expire this week. And those are the ones that I took on this play right here. And it was because it was a cup and handle pattern. So high of the day, low of the day, lower high was unable to break resistance by 7 cents. Healthy consolidation. Right about here is when I bought into these calls and I exited when we hit a new high of the day. And it ended up being about a 12% gain in, maybe 10 minutes or so. Maybe a little bit more than that. I can actually tell you real quick. But the bottom line is obviously those options have very high risk, high reward. And so I use smaller capital positions. If I'm trading common shares with, X amount of dollars, I'm trading the options with 10% as much capital. So let's see, I held it for 10:55 a.m., exited at 11:03 a.m. So I held it for 8 minutes and got 12%. And just it could have gone against me. Obviously options, just as much as there is reward to the upside, there's that much risk. You can lose 12% in 8 minutes as well. But it was nice to see that liquidity on that strike price and that expiration. And we'll see how these tightening ranges head into tomorrow. We are looking for APH to need some hourly consolidation, and we have some clear support levels that must hold. Otherwise, there's a void of support going forward. So again, tomorrow, I already know I'm going to be trading less. I was extremely aggressive Monday and Tuesday, much less aggressive today. I traded one trade. Actually, I also tried to trade ACB today and ended up getting stopped out for a small loss. So the loss there was not comparable to the gain on CGC. Just making sure to keep those losers smaller than your winners. That's how you keep one foot in front of the other. But I'm not going to be trading much for the rest of the week, I don't imagine, because I don't see any clear setups that I like. And I'm going to patiently wait for the hourly charts to give me tight ranges, and then I'll play the breaks of those hourly ranges. And if I don't see any hourly setups that I like, I'll patiently wait for the daily ranges to tighten up and give me break to play those tight daily ranges. So we'll continue checking in as always. Again, I'll do some of those smaller cap videos probably on Friday, and I will see you all then. Do some good things out there. And again, congrats to Canada. Let's see now the dominoes fall around the world.